good morning, everyone, and welcome to Blackwing Trading. We are live for another Friday morning live, July the 11th, 2025. We're going to be looking at some things in the market today, talking about those post tariffs and tariff uncertainty and seeing how it affects the market. So we're already up on the charts. What we'll do is go ahead and start looking at our charts today. If you're new here, my name is Clinton. I am a trader, options trader, and a futures trader. I was in the military. I'm a pastor, and I am just trying to reach for financial freedom in the markets. And the whole purpose of me starting this channel is to show you there's something that's very attainable that you can get in the markets to begin to earn extra income. And so I go live every Friday. Live streaming, and I will show you live trading, good, bad, and the ugly, so you can get a good picture of what trading is, and you can see that this is something that is attainable. So let's talk about some pre-market analysis and some things in the market. A couple of areas of the news I want to talk about and see how it correlates to what's happening in the market. So this week was the expiration of the 90-day pause President Trump's tariffs from April, and that was on July the 9th was the expiration. So what the administration did is sent out basically some more tariff letters and adjusted some tariff rates for a couple of other countries, and you can look online to see those things. And then he imposed some more tariffs on a couple other things like copper, which matches the steel and aluminum. And so those things have caused the market to move a little bit. So we go to the 4-hour chart. I'm on a 4-hour chart now on Thinkorswim. You can kind of see what's been happening this week. We can see that we were at a little bit high about 4 days ago, and then we began to descend down to the 62.85 area. That is a supply area that I have, and you can see we actually dipped even below that on Tuesday and got a lot lower down to about 62.50 area. And then began to come back up, and we came back up to the 62.85 area again. And then the market kind of pulled back from there. And then after that, the market began to increase a couple of days ago. And it popped up through the 62.85 area, and then it got up a little bit higher. And then we can see yesterday it pulled back a little bit, but then it actually hit all-time highs yesterday, getting back up to that 63.35 is a new all-time high now on the ES futures. It was like 63.32. It made that high on I want to say that was on July the 3rd, which is last Thursday, before the July the 4th weekend. And so it got back up to that area. But last night when President Trump announced some new tariffs, he did some specifically new ones on Canada. So he announced a 35% tariff on Canada, and then he talked about a 50% tariff on Brazil. So Canada is one of actually our biggest trading partner, and so you can see how that affects the markets. The markets dipped really hard yesterday when he announced a 35% tariff on Canada and threatened more by August the 1st, and so the market dipped down pretty hard, back down to the 62.85 area. And then you can see it kind of came up and then went back down again. And so now it's kind of sitting at the 62.85, which is a supply area that's already been identified. So just so you can just see the power of recognizing these supply and demand zones, the market respects a certain price level. And even if it goes beyond that, when it pulls back to that area. Or if it goes up, it'll go up to a particular area. And then it'll pull back from that most times. So that helps us with trading because, if the market is descending and we're going short, we can say, okay, this is a supply area that it may bounce off of. Or if we want to go long, we might say, okay, I'm going to wait for it to go down. And then when it pops back up, then I'm going to go long at that supply area. So that's why it's so important to recognize these key levels. But so that's kind of how the news has been affecting the market. That's on the 4-hour chart. So I can take it down to the 1-hour chart so we can just see a little bit more detail in how the market has been moving. Like I told you, we had that big drop last night from the 63.30s, which is all-time highs because of what the president announced, down into this supply area, 62.85, 62.90. And then, like I say, it came up, traded up a little bit, went back down, traded up again. It's trading down right now. So I'm gonna take it down even a little bit closer into the 30-minute time frame. When you're plotting your key levels, you always want to start at the bigger time frame and then go down to the smaller time frame. And so that helps you be able to plot key levels, because you want to plot levels that's been hit multiple times, over 2 weeks, 3 weeks, a month, even a year. You can go out and say, okay, yeah, this level is something that's hit multiple times. The market has hit this multiple times. So that's how you plot your key levels. But you can see, over the past couple of days, how the market is traded. Like I say, yesterday was pretty much a bull day. The market ran pretty high and it kept going all the way up and made a new all-time high and then pulled back. And so we see that. And so we're going to go down to that 5-minute time frame, which we normally trade on. All right. So that's where we're sitting at right now. The next levels below this. So obviously we have two scenarios. Either the market can go up or the market can go down. So the market goes up. I can see it, maybe testing 6,300 and possibly even 6,320, going back up to try to recover some of that it lost on yesterday. So that's the area that we can be looking at. And our pre-market high is 6,310. Our pre-market high is 6,310. So, that might be an area we're looking at. Now, we're going to do the 15-minute opening range break. So, so that's what we're going to be looking at. Sorry, I had some good kids trying to come in here at this time. But we're going to do a 15-minute opening range break. So we'll see what those levels are. If it goes above that or if it goes below that. But the pre-market high is 6,310. Then it could go even higher than that. Now, on the low side, let me just zoom this down a little bit. If it goes below 62.85, 62.70, you can see that it's been traded over a couple of days around 62.70 and a little bit below that 62.60, 62.50, 65 is the area that it can trade to. So we would look at that and see if it trades down below that. But that's the bottom side. So the way it's looking now, I think it probably market may pull back even a little bit more. Just because of the announcement of these tariffs, especially with the ones with Canada, because that affects us a lot. But you never know. So we're going to let the market do what it does. And then, whichever direction the market takes, that's the direction that we're going to take. All right. A couple of other things. I kind of talked about the tariffs. August 1st is a new deadline. And so, that's something that's going to be coming up in the next couple of weeks. Another big thing that's coming doesn't affect us today, but it does affect next week, is earnings season starts. And so I told y'all on the stream before, earnings season, you have 4 times during the year. Earnings are done quarterly, where all the major companies will report what their earnings are and what their forward guidance is. And so that starts next week. And so that's going to be interesting to see how has all, tariffs and all these things affected the bottom line of companies, because that's going to be an indicator of, how strong the economy is and what the markets are doing. And then even can, trickle its way down into, employment and all those other things. And so that's going to be something important that we're looking at. And Wall Street is looking at that next week, too, because they want to see how companies are affected by this. So that's another thing that's happening next week. So kind of talked about these levels already, just so we can see what we're looking at. And it's trading kind of in a tight range right now for the past hour or so. So the market is just kind of waiting to see, what it's going to do. We got about a little less than 5 minutes before we go, the market opens. And so we just kind of look and see what we got here, but no rush. We'll wait for that 15 minutes, see what the market gives us, and we'll go from there. There's one thing I have noticed that happened this week, and this is talking about the importance of adjusting your or being able to pay attention to what's happening. So I was trading earlier this week, and to be honest with you, I was having some tough times because the market started changing how it was trading. So the 15-minute open range break wasn't working because it was kind of doing a seesaw level. And so that's when a lot of times when there's some uncertainty, the market or trade, it'd be range bound. That's the way to call it, not seesaw, but range bound. It'd be range bound within, a couple points here or there because the market is uncertain. And so it'll go up and then it'll pull back and then it'll go up and then it'll pull back and go up and pull back in a tight range. And you never really get one certain direction. And so that was something that I noticed that happened, and it caused my strategy to fail because no strategy works 100%. Okay. You can pick a strategy and it can work 60%, 70%, 80% of the time. That's good. But then, you still have that 20% or 30% when it doesn't work because the market is giving you different conditions. And so you can approach that in a couple of other ways. You can not trade that day. If your strategy isn't working, you don't take the trade. And that's definitely nothing wrong with that because it's better to not take the trade and maintain your capital than to take the trade when your strategy isn't working and you begin to lose money. And so I've done that plenty of times before. And so that's something that I'm paying attention to now this week because the market kind of changed up a little bit just because of some uncertainty. And those things happen, and there's nothing wrong with that. You just have to pay attention. One of the things in trading is seeing how different market regimes work out. And sometimes the market trades a little bit differently and it changes up. And to be honest with you, when it changes up, that's a time when a lot of times we get stuck because we're trading one thing and we don't recognize when it changes. So. All right. I'd like to thank everybody who was on. Good morning, Joy. Glad that you're on. Anybody else, if you're on, just let me know that you're on. Hit me up in the comments or hit us up in the live chat. We're just waiting till the market open now. All the tech stocks are down right now. The NASDAQ is down about 100 points right now. The tech stocks are affected by these tariffs. And so one of the things that affects not only we hear tariffs on Canada, we get a lot of raw materials, basic materials from Canada, lumber, metals, aluminum, things like that. And companies in the U.S. use those basic materials to produce things. And so whenever you put a big tariff on Canada, then you put a tariff on a lot of these goods, and that affects everything in the bottom line. So these tariffs have a way of trickling their way into the economy and affecting us on more than one level. So we can see a lot of these tech companies are down right now just because of the tariff uncertainty. The overall market is down. The S&P 500 futures are down about 35 points or so. And we got a few seconds before the market opens. Once again, if you jump on, just get in the chat, let me know. Let's say good morning in the chat to let me know that you're on. I highly appreciate it, the interaction. And share this with somebody if you can. You can share this with somebody you think might be interested in trading if they're available on this morning. All right, that's the opening bell. And we'll see what we got here. All right, the market is open with a little push. little push. Look like it's kind of pulling down from VWAP. This is a down day so far. Most of the indices are down. So we got the ES futures that are down right now, 62.93. If I go over to the NASDAQ, you see the NASDAQ is the same thing. It was trading highs at the 23.11. Man, it's pulling up a little bit now, try to gain some steam. But it still is down overall. And you can see that if the NASDAQ is going to push forward today. And then we go to the Russell. The Russell 2000 is a collection of 2,000 small cap stocks, popular small cap index. The Russell had a high yesterday as well. Like I said, the market was kind of rallying yesterday, and then when the announcement of the tariffs start to pull back pretty hard. When you see the small caps begin to win, that's a good indicator that the market is actually doing well, because you have those small cap stocks that are winning. That's like I said, a good indicator that the market is doing well. A lot of times big companies can be doing well, but the small companies are not, and they're struggling. And so whenever we see the Russell, it's a good indicator for the overall economy. We see the Russell doing well. That's a good indicator for the overall economy as well, that it's going deep into the smaller companies. And we can see about a sheer number as well. So like the S&P 500 is 500 companies. You know, the NASDAQ 100 is the top 100 stock tech, companies on the NASDAQ. But the Russell is 2,000 companies, right? And so you have 2,000 small businesses, small cap companies who are on the market are doing well. That's a good indicator that the market is doing well. All right, so we'll go back to the ES. Yeah, we can see that it's pulling back just a little bit. That's weird. My areas kind of disappeared out of here. That's a little weird, having a glitch in the software. I'm going to begin to put some of those back in place. While the market is doing what it does. So one area is 62.85. And it looks like it's pulling below that right now. Yep, everything just disappeared. Amazing. No worries. Y'all can get to see how I actually put these things on the chart. So 62.85 was an area. 62.70 was another area. And And I draw a line at 6335.5, which is the all-time high. I normally do this on Sundays and then at night to kind of prep beforehand. 6320 was another area where it hit a high. So we'll put a line right there. This is one of the major parts of trading, of knowing where you're trading at. All right, and so now we're gonna go ahead, and then I had another area down here, I believe it was 62.55. Put one down there, 62.55. All right. So now we're gonna go ahead and put those demand zones in, and I do those by doing a rectangle. All right, so we'll put one at 62.85 to 62.90. And we're gonna go ahead and edit these properties and make that bigger. So we're gonna call that one green because it's a supply zone. So we'll change that color to green, but dark green. All right, and so we changed the date. So I'm gonna change this from 30th to, we're gonna put this one out a little bit, to the 21st of July. Boom. Now, I'll take this, let's copy this, move this up. We'll edit those properties to the 21st, the 30th. Oh, I gotta change those times up. And all this is happening while we got a 15-minute open range break going on, so it's perfect. Mm, 6320, 25. Boom. Oh, we got to change that color to red. There we go. All right. Let's adjust these colors right here. So we're going to change that 62.85. And this goes to 1500, which is the end of the trading day. Now, if you have your own broker, this is part of the of being able to trade well. May not seem like it, but it is. You have to be comfortable with the actual platform that you're using. And so knowing the platform and knowing how what it can give to you, and those things are good because this is all tools to help you trade, right? And so these lines and boxes and things, these are things that let me know certain areas that I want to trade in and out of. And so you have to know how to be able to manipulate this to give it so it can give you what you're looking for. And so, all right, so we've thrown the ones on there that's good enough for trading for now. These are the levels that we talked about earlier. We had the all-time high, 63.35. We have this demand zone or supply zone at 63.20 to 63.25. And we got the 62.85 area that we're trading at right now. We can see that the market's still kind of trading somewhere in the area. And then we got a couple of levels below. And so I feel good enough that we got the areas that we need to trade in. And we're going to take this, go ahead to the 5 minute, because we're approaching now that 15 minutes. So we got the first 2 candles. So I make this, we're within that 3rd candle now, right? And so now we can go ahead and take this box and we can draw that 15-minute open range break area. And I'm just going to go and take it down here to about 6280, 6281.5 or so. This is just really an estimate. We're not done with that range yet, but this is an estimate. So what we'll do is just get this set up just like we did the rest of them now, right? So we'll take this out to 1500, which is 3 o'clock. So it'll be with us for the rest of the day. This is already starting at 8:30, and this is just for today. And the bottom right, I want to make that 6281.5. Actually, I could make it around about 6282, and that probably would fit what we got. And this one will make about 62.99. All right, so we got us a box that we can trade in. And one more thing I forgot, we're going to make that one gray. Okay. So this is our 15-minute range. And we're at 8:42. And so we're within that 15 minutes. You can see that the market is tending to trade down right now. And so just to go over the strategy, what I do is draw out the 15-minute opening range break area. Then once it breaks either up or down, I'm looking for a 5-minute candle for a confirmation candle to make sure it's continuing in that direction. If I get that candle, then I'm gonna go short, or if it was on the other side, you know, I would go long and go up. But this one is short, so it looks like it's breaking that area. And since we have our bottom areas drawn out, we got to have a kind of an idea of where it could go. And so again, I'm gonna take it on a bigger time frame right now. We can see that the next area below is at 62.70. So if it breaks low, it's at 62.81 right now. If it breaks down, we could probably take it. I would be expecting them probably take profit somewhere around about 62.70. Yeah. We're below the lows for the previous day and all that. And so if it goes down, it's going to go down to that area. And we can see it's pushing hard down right now. And then go back to this 5-minute candle. Yeah, we got it pushing down pretty hard now. These bars on the bottom is volume. I like it on my chart like this. You could change it up to where your volume isn't overlapping, but I like to have my volume overlapping where you can see it, because that way when volume is coming in, I can see volume coming in, and it catches my eye more than being down here at the bottom. So this went down all the way to like 62.80, which it is definitely pressing low. So I'm going to adjust this just a little bit here down to 62.80. So we got about a couple of seconds more. So this is the 15-minute range. You can see that's a pretty big range from 62.80 all the way to 62.99. All right, so that first candle broke. You can see that broke through pretty hard. I may adjust the strategy just a little bit, just because it's at 62.78, 79 right now, and going down to about 62.70. That's not a really big move. I mean, it could actually go below that. We'll see. There's not that much room on the downside is what I'm trying to say. But it could continue to go lower. Or it can come up like it's doing right now. Let's make that a little bit bigger for y'all. And just so you can see my top step screen. Adjust that a little bit. This is where I take my trades at on Top Step. It's a completely different broker. I am a funded trader with Top Step, and so you get an idea of what it's looking at now. I'm gonna make this, it's a little bit bigger so we can see it. Yeah, I don't know if it's going to try to catch his footing up or down now. It's below VWAP, well below the 9 EMA, but it looked like it's trying to come up, so I don't know. There is some buying, but sellers are in control because it's below VWAP and below the 9 EMA. Okay, we see a little bit of a reversal now. And it's pushing up. Okay. All right, that's a strong candle up. See if it maintains that momentum up. So we do have a lot of room to run up. The market was up at the 63.30s, so there is a lot of room to the top side. The top of our range is 62.99 or so, 6,300. So we'll see if it gets up there. Never rushing anything, taking the trade that we want to take. Let me know you're here in the comments. If you jump on the stream, let's say good morning in the comments and let me know you're on. I love to interact with you. So if you're just jumping on the stream, let's go over there in the chat, and then put good morning. All right, starting to push up now. It's above the 9 EMA. So now we're going to see if it takes VWAP. If it takes VWAP, that's going to be a good sign that the buyer's in control, and it may push up to those highs from yesterday. Now there is an option. Since we were at the supply area here, the 62.85 to 62.90. I mean, you could go long on the top side of that, just hoping that it doesn't fall down below the back into this area. But there's two things, especially about going long. I like to take long trades above VWAP. The volume weighted average price, this purple line that you see coming through here, this is the volume weighted average price. And it's a great indicator to let you know who's in control, buyers or sellers. You might see that or hear about that if you're looking at some YouTube channels where we talk about buyers in control or sellers are in control. If sellers are in control, that means that you have more selling volume than you have buying volume. So generally the price is going to go down. If buyers are in control, that means you have more buying power than selling power. Then that means that the price is going to go down. Chantel, thanks for jumping on. So even though this is a supply area, I just want to see that it's going to go above VWAP and then it will continue to go up because it could pull back. You see, like right now, and then the market this week has been doing some big swings. Like you can see within this 5-minute candle, we're between 62.88 and 62.93, which is it's a 5-point swing. And depending how heavy you are in the futures contracts, I mean, that could make a big difference. Matter of fact, if I'm usually taking like one contract on the ES, so 5 points is like $250. So that could be a big swing, and depending on what your risk parameters are and stuff like that, that could hurt you. And so I just, like I say, I want to be a little bit more judicious and look at it and see how it's going to go. But if it goes above VWAP and it looks like it's going to pop up to that 62.99, 6,300 area, that's going to be a key for me to go ahead and go long because I think it's going to go. But we'll see what the market does. If you haven't done it already, go ahead and hit like and subscribe on this video. If you're getting something out of this, it helps the algorithm, helps me grow this channel. Trying to grow this channel to make it all the way free. A lot of people on here, they're selling memberships and doing all type of things. I don't want to sell anything like that. I just want it to be a free channel where you can jump on, you can see some live trading. I talk about trading concepts. I'm producing videos that talk about futures trading. And my goal is to make sure that regular people can see that this is something that's accessible, that you can earn some extra income. Yeah, it's a little hesitant right now. So we're just waiting for it to get its footing. Thought it was going to continue to go lower, but it didn't. It got down to as low as about 62.78. And then it's starting to come up now. It is above the 9 EMA, but it hasn't broke VWAP yet. This purple line, VWAP, as I said earlier, is the volume weighted average price. It looks at the price compared to volume to see if there's more selling volume or more buying volume. And if it's above the line, that means it's more buying volume. If it's below the line, that means it's more selling volume. One of the indicators that I put on here, I really only put 2 indicators on here, is a volume weighted average price and a 9 EMA. The 9 EMA is the exponential moving average. So it takes the moving average of the price over 9 days and kind of averages it out. And if you're above that line or below that line, it's another indicator like which direction it's about to go. So it's above the 9 EMA now, which means it's about to, increase when you look at that volume weighted average price over the past 9 days. And we can see we just hit VWAP, so that's a good thing. It's got some strong volume up above VWAP. And I'm looking for above 62.99 from that high of the opening range break. broke VWAP, so that's a good sign that it's about to increase. All right, so it's still pressing up. I haven't took a trade yet. My trade screen is clear. This is the Top Step X. This is their trading platform. I'm more used to Thinkorswim, and so I don't do any of the putting my lines and analysis on here. But you can do it on this platform. It's a great platform as well. So I may look at doing that, but I am more comfortable with doing it on Thinkorswim, and so I may just leave it the way it is, because they say you can't teach an old dog new tricks. But but either way, this is a big part. Knowing your platform is a big part of being successful at trade. It's just not just pressing a button at the right time, but knowing your platform, knowing, you know, how to trade on your platform, being comfortable with it helps you, because especially trading can be a lot of stress. And so if you're comfortable with the platform and you're knowing what you're doing, that can help you in your trading. If you're uncomfortable or you're not familiar with it, it actually can cause you to make mistakes and do things like that. And in trading, you will make mistakes pressing buy when you're meant to sell, pressing sell when you're meant to buy. All those things are going to happen. And so, you know, you kind of get ready for that. But you do want to be comfortable with the platform. What I like to do when I get a new platform, if they have a practice, I like to practice on it and set everything up the way that I want to set it up and get comfortable with how I'm looking at things. I put things in the order where I want to look at it at, and I'll do that before I even trade on it, because I want that all set before I start doing anything with money. All right, we are looking good here. So here's 62.96, this was a high from like last week. And so I have it drawn as a dotted line because this was before it hit the 63.30s. So I still have that line on that because the market does respect previous price levels. And so you can see it can hit right there, and it's kind of, you know, adjusting around that. I'm feeling comfortable now that the market probably is going to go up, because I can see this strong move up like this. And like I said, once it pops above my area, I'm going to go ahead and go long and see what I got. There may be some hesitation around 6,300. Now I'll probably go long at 6,300 because that's a nice round number. It's a psychological level. And so I am going to probably go long around 6,300 if it pops up through that area. Come up on 9 o'clock. We're going to see what the market is going to do.
Domino's best deal ever is back. Get any hand-tossed pan, thin crust, or New York style pizza with any toppings for just $9.99 online.
Okay, look like it's pulling back.
What they wanted. Pan pizza with barbecue sauce, mushrooms.
This is why I like to trade this strategy. In this gray shaded area, I'm not going to say I don't try not to take trades. I call it a caution area just because that's the area where you might see some uncertainty. But once it really pops out and goes in one direction or the other, like I say, no strategy is 100%, but probably about, I can probably research my win strategy using this. But most of the time it keeps is set direction in which direction it pops out at. And so that's why I like to use an open range break. You get a range that you can see where all the uncertainty is at, and then anything above or below that, if it goes, the market chooses to go in that direction. That's the direction that I trade in. All right, so right now you see it pop back down to VWAP and it popped up. It lets you know that those buyers are still trying to take control in more buying volume. Once you get above this purple line, which is the volume weighted average price, then the buying volume becomes more than the selling volume. And so you can see that there's more buyers stepping in, and they're buying this up to drive it higher. But sometimes there can be tug of war between both. So we had 3 strong candles going up, and so now you have one pulling back. That's another thing about trading too, these little things that you need to pay attention to. If you have a bunch of strong candles going up, green candles going up, everything that goes up must come down. Everything that goes down must come up. So when you look at the constant, maybe buying volume or strong momentum, sooner or later it's going to pull back. You just have to be patient and look. The same thing with selling. If you have a bunch of selling and it's just going down, 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 sooner or later it's going to pull back up. We are staying above VWAP though, and then we're still above the 90 EMA, which is down here at like 62.90. So that's good. But we're going to see if this pulls all the way down or if it continues to go up. He is hesitating now. I don't like to see that. Makes me think it's going to come back down. Was having a hard time breaking above 62.96. Oh, there we go. Okay. Uh-oh. Now I trade the ES futures, the minis. So those move at $50 a point, and so those are a little bit more expensive. But if you get into trading, like if you get with Top Step, I'm recommending Top Step is a great company to trade futures with. You can trade the micros, and the micros move at $5 a point instead of $50 a point, and so you can get the still get the same trading concepts, but you're doing it with smaller money in the game. And so, especially if you're trading on your own account, I have my own account that I trade on, but if you're trading on your own account, is definitely if you get the approval, you can start doing it with the minis, and it's a great way. You can still make good money with the minis. Make a couple $100 a day trading, and then you can move up when you feel more comfortable. The great thing about trading too is scalability. So the same trade that you'll take with the minis, the micros, you can trade with the minis because it's the same chart, the same thing. Is that you got more money in the game, and so. I traded when I first started trading futures. I actually started trading the micros, and I like trading the micros. And then so I moved up to trading the minis to put more money especially when I started doing a Top Step because they're funding me. So they're giving me their capital to trade. But trading the micros are just as good as well. Especially, I would recommend that if you're first getting into this because it's going to be like I said, a smaller amount of money that you can be used to trading. And the cool thing with the Top Step, you can trade the micros as well. It is possible to go long around about 62.96. I just want to make sure it doesn't turn down. I don't like these big moves. This is something the market has been doing because of uncertainty with the tariffs. Has been doing these big moves. Like you can see this one candle got all the way up to 62.98 and got low as 62.94. So that's like a 4-point move, 5-point move within the 5-minute time frame. The same thing like with this opening candle was a huge, almost 10-point, 88 to 98. So you see a lot of that on the open, but even now here we are at like 909, and you had these big moves like that. It can be hard to time those. And now if you have a certainty that it's going to go in a certain direction, what you'll want to do is try to time it on the bottom and go long, or wait to the next candle, and then as soon as it opens, if it's on its way up, you would say, okay, at the bottom of this candle, this previous candle, I'm going to go long, and then when it goes up, I'll just ride it up. But the way it's doing now, it's looking like it's starting to pull back a little bit. This is actually almost like a ABCD pattern, where you have a big move up, and then you have some consolidation in the middle, and then you have a stronger move to the upside. Yeah, but it's pulling back now. It was a strong move down. These past 3 candles have been respecting VWAP. One here, one almost at VWAP, and this one went down to about VWAP, and then it came up. 62.94 would be a good area to go long as well. If it goes back down to that area. If you can do me a favor, go ahead, hit that like and subscribe. Hit that notification bell so you know when I go live. You won't ever miss it. Helps the channel out. Helps me grow the screen. Okay. All right, that's a strong move up. Let's see if it holds that push coming through 62.98, 98.75. Okay. So it is getting some strength. Pulling back a little bit. Now 62.97. Actually, I may end up going long there and give myself 4 points of risk down to 62.93. And then pull up my other screen here. Oh, it's popping. All right, there we go. Okay, let me go to my other screen here. I'm gonna go along at 60. Oh, there's 6,300. All right, let me find about 62.99.
Order filled.
All right, so got it at 62.99. I'm gonna give myself $200 worth of risk, and I'm looking to make 500. So looking for 63.08. All right, so I am long one contract now. And it's pulling back a little bit, but we'll see if it pops up. Okay, it's at 6,300 now. All right, up a little bit now. I'm going to move up. I'm going to move up to break even on the bottom side so I don't lose any money. Okay, it's pushing up. All right, so one of the ways I protect my profits is once it goes up to 1R, so I risked $200 at first. So once it gets up to $200, I'm going to bring my stop to 200, so that way I can protect that $200. So if it pulls back, I'll make at least $200. But right now it's hovering at about 125, 130. And right now I'm just at break even. So if it pulls back and turns around on me, I won't lose any money. Ooh, it's kind of pulling back pretty hard though. Come on, let's go up. All right, there we go.
Dad, the cousins in Mexico have a surprise for you.
And enjoy the gift of staying connected. Switch and start saving today. Get 4 Samsung Galaxy S25 phones with Galaxy AI on us and 4 lines for just $25 per line. Plus, non-stop talk
In the trade now,
in Mexico. Tap the banner to learn more about the store.
it keeps hovering back around 6,300. I know it was going to, actually, I'm going to give it about 50. I'm going to give it about $50 worth of risk because I don't want to pull back, just barely pull back and then take me out. So there's like $60 worth of risk just below the bottom of this candle.
Learn more about the everyday, everywhere Navy Federal More Rewards American Express card at Navy.
It's going to hesitate at 6,300 because I told y'all that's a psychological level. So you might have some up and down there, and I don't want to get stopped out at that level. Wow. Okay. Trying to find his footing back up. Okay, there we go. On this next candle, let's see what this does. It's definitely trying to find its footing. Around 6,300. All right, there we go. To go back to my other chart, you can see it's made a definitive break above that 15-minute open range break, and so it's starting to push up now. It did hesitate around 6,300. Like I said, that's a nice even level, so sometimes you'll see some movement around that. But now we're gonna wait for it to make its move up. Continue to make its move up. Now, actually, I do want to protect some of these profits, so I'm gonna let it push itself up for a little bit. Normally, I let it go to about 1R. Okay, there we go. So that's a stronger move up. Okay. All right, definitely moving to break even so I don't lose any money. And I'm up about $200 and some now, so I'm just gonna let it get some room, and I'm gonna put that stop somewhere around that area, a little bit higher. All right, there we go. Strong move up. Okay. Right now I'm up about $225. It's got room up through here. I see around 63.10 is where the high it was. 63.11 was the high in the pre-market. That was overnight. So it got up to that area. That was about the high. So that'll be another area where we want to look at to see what it does. I have my take profit level at about 63.08. I could bump it up to about 63.10. But that's another area that we're going to look at. Now it could break and continue to go all the way up to 63.20. But we'll see what the market does. But you can see power of the open range break. Once it breaks up and you go long, it's going to kind of have some continuation up. All right, so keeping with the strategy, I do want to do let's see what we got here. Is it going to go up or go down? Okay. Still trading up. All right, up about $300 now. All right, so it's starting around 63.05. Remember what I said? What goes up must come down. So people are taking profits because we had these strong candles up. I am gonna move this up to 150 though. So now my stop out is gonna be at 150. So I make $150 if it just pulls back really hard. But I want to give it some. I do want to give it some room to go up, because if I pull it up too high within that range where it's oscillating at, I could rob myself of some profits. So. All right, and it's starting to push up pretty good. Let me see, can we be patient here and allow it to come back up, or see what it's going to do? If you got any questions, hit me up in the chat to let me know. Like I said, I like your interaction. If you got any questions about what I'm doing or something doesn't make sense to you. But my standard, so I have my profit is at 2-to-1, my risk to reward. So I was risking, $150, $200 to make $500. So that's like a 2-to-1 risk to reward. And that's how you stay above the water in trading. You want to risk less and make more. It's starting to pull back a little bit. I don't like this. But I don't want to get anything out of this. So if it goes below 150, I'll take $150 win, and then we'll see if we can get back in later at some point. Hopefully it doesn't pull down to that point. Uh-oh, I think it is. Oh, and push back up. Okay. If it pushes back up hard, I'm going to take my stop loss to up about $200. But that is an example of why you want to, when you bring your stop levels up, you don't want to bring it up too high, because it's going to do some oscillation, some fluctuation from volatility. And you want to make sure that, I don't rob myself, because it's actually kind of like what you would be doing. I've done that a lot before, where I'm so happy to make that money. Once it crosses 200 or 250, and I want to hurry up and move my stop there, and then it'll come back and stop me out, and then continue to make a further move all the way up. And so I think 150 is kind of a good area here. See, it's pushing back higher now. And I am going to move my take profit up to 63.10. It is doing some hesitating at 305. I really don't like this. Waiting for that continued push up. I'll be honest with you, for a lot of my trading career, this will really be getting into my loop right now. I was just hesitating at a certain area. And what I usually would do at this point is like I'll pick a number probably like 300 or something, and I would like, oh, okay, I'm fine. And there's nothing wrong with that. Listen, there's nothing wrong. You can't make profits until you take profits. But I'm learning that a lot of trading is about patience, right? And trusting your plan. And I think my plan is solid that it's going to get up to 310. It may not, but a lot of times you have to be patient and allow the plan to work out and don't micromanage it. So right now, like I say, it's hesitated. We can move into another candle, and let's see if it continues to push up. I hope it does. It look like it is. But I'm gonna keep my take profit level at around 150, just to kind of be safe outside of pulling back. Now, if it pulls back to there, hey, I'm not mad. I made $150. That's better than zero. But if it continues to go up and I can make $500, I'd much rather do that.
That'll be 30 each.
And just so you know where I got this 6310 from, we go back to the pre-market. So this is the pre-market levels. We're here like 6311, 6310. And we can see right now it says 60, it's at 6307. So it's trading around that area now. And I'm just expecting for it to push up to 6310. So not picking this number out the blue, but just recognizing those previous levels where it was trading at overnight. Okay, so we're still pushing up a little bit more. I'm up about $400 right now, so that's good. Now, since we're getting this high, I'm gonna go ahead and move my take profit level up to $300. So and that's just below the bottom of this candle. So if it pulls back, I'll take I'll take a $300 win. All right. Come on, baby. Give me what I want. Oh, I think it's gonna stop me out at 300, but like I said, I ain't mad about that. Yeah, I think it is.
Order filled.
All right. So I made $300 on that trade, but like I said, I'm not mad. I gave it a little room, but it may continue to pull back up. Yeah, it is now. I probably should pull that down a little bit lower, but hey, it is what it is. So I'm not mad at a $300 trade. That was a pretty good trade. I'm going to wait here and see a little bit if it continues to pull down or if it continues to go up. But that was $300 in the bank, and so I'm cool with that. Yeah, it's pulling down a little bit harder. If I'd have had it at 150, I don't know if it's going to pull all the way back or what, but the 150 area was somewhere around here. Well, looks like I made the right decision. Now it's pulling down even harder. So sometimes you never know. I thought it was going to get up to 63.10, but it didn't. It got to 63.07. And it pulled back. Maybe it might go back up. Let's see what it does. Maybe just taking some profits and then push up there higher. Or I could go all the way back to where I originally got in at. We pull back up, think or swim. So we can see the normal area. So it pushed up to 63.07 and some change, and now it's pulling back down. If you remember, I got in at around 6,300, 62.99, and so let's see, it's pulling down pretty hard now. So that was an example of pushing my take profit up that actually worked out for me. So you never know in trading. So it's pulling down back. It actually probably would have stopped me out because 63.01 or some change was where my $150 level was at. So pushing my take profit up to $300 worked in my favor because I'd have got stopped out at $150 versus $300. And so made basically double the profit. And it looks like it wants to pull back. It's pulling back to the 9 EMA. Yeah. Okay, so it didn't make 63.10, but it's pulling back to the 9 EMA. So that's something that you want to pay attention to. But you want to be consistent in how you take your profits, right? So the first one I moved up, which is my normal risk is $150. And so once I got above $150 and had some room, I moved up my risk to 1R. So that means that I'm going to make $150. And then I doubled that to 2R, which is $300. And so that way you're consistent in where you move it at. And you also want to be looking at the chart so you can give it some room just in case it's going to continue to move up. But I'm pretty comfortable, and I am actually pleased with this trade, just because it looks like I moved it up in time. Now, where would I get back in? If it pulls back below 6,300 and hits our gray zone, obviously I don't want to be in that area, but you never know. The way that the market is going now, this could be a big fall where it could drop well below this range and keep going down, especially with all the news with the tariffs and everything. So I would look at this, and if it falls down and goes below VWAP and it looks like it's going to continue to go down, probably somewhere below VWAP might be a good area to get in and go short, just because the market has been breaking down. So like if we see what it did a couple of days ago, not that day, but you can see it did that. It went up, and this is a couple of days ago, went up and made a strong push up just like it did this morning. And then at around about 9 o'clock, it made a hard move down, came through VWAP, kept going down, down, down below the supply area. And then, it found its footing somewhere around about 62.75. And then it came back up into this area and traded there. And then it pushed up later. And so that's something, that you can pay attention to. So if it starts falling, it goes below VWAP, that would be an area that I would go back in short. And then look for it to trade down to maybe 62.70 or something like that. But it looks like it's pushing back up. So that might just be some profit taking before it makes a strong push back up. Yeah, it's pushing down. A little bit, but it's got some buyers in there. So this is the power of VWAP. You can see that even though it's selling like this, is you can see that you have buyers pushing it back up, and it's selling now. You might have some power. Some buyers pushing it back up. And so right now it's above the 9 EMA and it's above VWAP. So that means that the buyers are technically still in control, even though there's some selling volume pulling it down. All right, so this is a strong push down. It's going to test 6,300 again. And the VWAP area is around 62.95, 62.96. We saw how it was hesitating around 62.96. That'll be an area to pay attention to if it goes below that. All right. One thing I want y'all to get out of this is power in trading too is you picking when you're going to go in versus reacting to what you're seeing. When I first started trading, I just will react to candles. One going up, ooh, jump in. One going down, oh, here, pick it out. and you never win like that. And so you want to pick when you're going in and out, set your own parameters. Will you be 100% right? No, you won't. But you will be right more often than not if you're picking when you want to go in and when you want to go out. And the strongest way to find that out, I've learned, is just looking at previous price levels. And so that's why I draw out these areas, because you can see where the market has traded at before, and the market trades in those same areas, over time. And so, like for instance, when we saw it was hesitating at 62.96, but that was a previous high from last week. But since the market recognized that level, it's going to trade around there. And then, like we talked about the 6,300 being a psychological level. The market was hesitating around that area. And so you can pick certain areas where say, okay, I'm going to get in here, or I'm going to get out here. Same thing, getting in and getting out. If you're controlling that, you have a much likely a better success in being successful in trading. Also, sticking to one strategy and mastering it. One big mistake I made in trading is jumping across different strategies, especially like when I traded options and other stuff. I'd be trading different strategies, and I had success in ones after staying with it for a while. But usually the tendency is like, if you start losing, then you want to change it up. You're saying, hey, this not working. Well, that's actually not the right type of thinking, because every strategy is going to lose at some point. There is no strategy that's 100% complete. If you come across trading, or you see somebody online telling you they win 100% of the time, listen, they are lying to you. They are telling you a bold-faced lie. There is no, even the most successful Wall Street traders, they don't win 100% of the time. I mean, they have high win rates, and they set strategies. You can set strategies to where it makes it more likely that you're going to win in just about any scenario, but nobody really wins. There's no one strategy that wins 100% of the time. So, but it's also recognizing how successful is this strategy. And then when people who win a lot more, they recognize how the market changes quicker than others, and then they adjust their strategy accordingly. And so that's what a lot of people, more seasoned traders and investors and the people at Wall Street, they recognize when these regimes and these things are changing in the market. And then what they do is that they just change up a strategy that fits how the market is trading at that particular time. And so you can see, okay, now it didn't go down to VWAP or anything like that. It's bouncing off the 9 EMA, and so it's going to go back up. This may be actually a good area to go long, around 63.02. But we're going to see what it does. I'd much rather, if I was going long, I would much rather go long at around about 6,300 versus 63.02, just because that's that nice psychological level. But actually, I don't think I am, because it may actually go down. So, all right, we've been on for about an hour and 30 minutes. It's almost 10 o'clock. And I may wait for a little bit. I'm usually done by 11, though. So I may wait and see what it does. If not, I am cool with a $300 win for the day. We'll put that in the books. And then we'll move on to fight another day. So I'm definitely great with that. I'd like to thank everybody for jumping on. If you found value out of this, please hit that like button, hit subscribe, hit those notification bells. Don't forget, I'll be sending out a reminder email. This Sunday is episode two of Futures Trading 101. So if you miss episode 1, is on the webpage, on the YouTube page now under Futures Trading 101 series. You can see it, or either previous live streams. So I'm going to go live on this Sunday at 6 p.m. And then I'm going to be talking about the types of futures contracts. We're going to be talking about, agricultural futures versus metals versus, equity futures, because the futures market is very robust. And I want to tell you about the different types of futures so you can see which ones you can trade. you can see that I'm always trading one type of futures pretty much, which is the S&P 500, which is equity futures. And if you decide to trade, wow, the market is dipping pretty hard right now. Okay. So it looks like it's about to go down. So if it goes below VWAP, like I say, maybe an area where it can go long at. VWAP is here at 62, 62.93, 62.94. So we'll see. But getting back to that futures conversation, futures lends itself. Why this lesson is important. This is why you really need to get on that lesson. Why this is important, because futures lends itself to you being specialized in one or two types of futures, right? You're going to see when I teach, like, agricultural futures move in a completely different way. They have a whole different system set up than equity futures, than precious metals, than other ones. Each futures kind of have its own nuance. And so people, when they're trading futures, they usually become specialized in one type of futures. They know how it moves. I started trading the equity futures because I've been watching the ES futures over the past 3 years. And so I know how they move. And so when I transitioned to trading futures from options, it was a seamless transition because I know how they move. I know kind of how it works because the S&P 500 futures and the SPX, which is the S&P index, when I'm trading options, that's essentially the same chart and is moving the same exact way. And so it was seamless for me to transition. But there are certain people that, like, you might want to specialize in crude oil. You might want to specialize in natural gas. So we're going to talk about all those different types of futures and, some nuances for each one so you can be more informed and see which one you might want to pick. But like, subscribe. Thank you for joining and jumping on this live stream. And until we meet again on this coming Sunday at 6 p.m., continue to trade with me.